For European markets have been up and down on Monday with muted activity as US markets are closed for President's Day. Investors are really looking ahead to consumer confidence data coming out and the US Fed publishing notes from its latest meeting. Mining stocks lifted things a little bit while household goods, tech and retail stocks pulled in the other direction. Let's talk to Susannah, who's head of money and markets at Hargreaves, Lansdown, a financial services company based in the UK. Good to see you, Susannah. So a slow start to the week on European markets, but stocks seems strong despite all of the economic uncertainty out there.
Yes, I think really investors are searching for a bit of sense of direction, really. Or what we saw the end of last week was that uncertainty creeping back in again about just how far interest rates will go up in the United States and how long they will stay there for, because we have all of that strong data out, retail sales, for example, coming out much stronger than expected, a whole raft of data really showing that actually, the war on inflation is not yet over, and it's going to take a lot more effort from the central bank to rein it in. And so that's why you saw some weakness creeping in. What you're seeing today is, yes, markets on Wall Street shut President's Day, but I think there's also a look towards China and the reopening in China, perhaps as a counterbalance for uncertainty about what's happening in the United States and to some extent Europe as well.
And it's quite light on the data front this week, but there are some hints that Germany's economy is, in their words, somewhat brighter. So what's changed?
Yes, we have had that snapshot out showing that actually the German economy does seem to be more resilient. And what is crucial as well is that there is this expectation that Germany is now past that peak inflation that had been so worrying. Of course, what's been happening is the fact that energy prices have come down considerably. We've had warmer weather, we've had stockpiles not being eaten into to the same extent. In fact, gas storage levels remain across Europe about 65%, which is some way above the 10-year average. And that has all really lifted sentiment, particularly in Germany. The economy is showing much more resilience than had been feared.
And oil seems to be bouncing back. To what extent do you think that's a China story?
Yes, I do think that that's certainly led by China and the Chinese reopening following, of course, the restrictions that have dampened down demand. There is an expectation that companies are going to be using a lot more energy going forward. But also we do have supply side issues as well eating into this with the United States, saying that there are going to be stricter sanctions on Russia in the energy sector and the financial sector as well, which is added to some concerns about the security of supply and whether or not there will be enough oil around to meet demand, which is also supporting prices. But as a counter to that, of course, you're not seeing them running away because we have still this ongoing concern about weakness in general across the global economy because of this ratcheting up of interest rates.
Susannah Streeter from Hargreaves Lansdown, thank you very much for that snapshot of what's happening on European markets. Thank you.